Why do some companies thrive while others collapse under scandals like Enron or Satyam? The answer often lies in one powerful framework, COSO, the global gold standard for governance, risk, and internal control. COSO started in 1980s to fight corporate fraud. But today, it goes far beyond financial reporting. Its principles, ethics, accountability, risk appetite, and resilience. They help organizations navigate modern challenges like cybersecurity, sustainability, artificial intelligence, and global trust. From banks and telecoms to e commerce, tech providers, healthcare, COSO provides boards and professionals with a compass to link risk with strategy, compliance with innovation, and performance with integrity. Unlike other framework, COSO isn't just a checklist. It's a mindset. It's the bridge that connects regulators, auditors, leaders, and employees in a shared language of trust and accountability. So, if you want to understand how COSO can prepare organizations for the future, from AI and cloud to 5G and ESG reporting, join me in this deep dive. Good governance is not optional. With COSO, it becomes your foundation of trust, resilience, and long term success. Welcome to this part 3 of the series. This is your host, Savit Vittal Salian. Namaskar. COSO in the digital age. When COSO first released its internal control integrated framework in 1992, organizations operated in a largely analog world. Business risks were concentrated in areas such as financial reporting, fraud, and regulatory compliance. Fast forward 3 decades, and today's organizations face risks that are digital, interconnected, global, and fast moving. Cyber attacks, data breaches, AI ethics, blockchain disruptions, ESG accountability, and 5G transformations dominate boardrooms' agendas. COSO has responded to this shift by extending its framework to the digital era. Although the core principles of governance, risk, and control remain timeless, COSO has published guidance on cybersecurity, sustainability, blockchain, and emerging technologies, demonstrating its adaptability. Cybersecurity is no longer a technical issue, it's a strategic business risk. Data breaches can damage reputations, disrupt operations, and invite regulatory penalties. COSO recognizes this reality and has explicitly mapped its framework to cybersecurity. COSO and cybersecurity developed jointly with Deloitte. This publication of 2017 provided practical tools for applying COSO ICIF and ERM to cyber risk. Boards must set a tone of cybersecurity accountability. Cyber threats are identified and evaluated in terms of business impact. Technical controls are linked with governance controls, continuous monitoring of logs, anomaly detection, and external audits are aligned with COSO principles. Example, a global bank uses COSO ERM to assess its cyber risk appetite, aligns with the NIST Cybersecurity Framework, and ensures that cyber risks are integrated into enterprise level strategy and reporting. Let's look at COSO and ESG, which is primarily the environmental, social, and the governance aspect. In recent years, environmental, social, and governance risk, which primarily constitute climate changes, social inequality, ethical supply chains, have become central to organizational resilience. Investors, regulators, and customers now demand reliable ESG disclosure. COSO has stepped into this arena. In 2018, COSO released Applying ERM to ESG related risk, guiding organization to integrate ESG into the risk strategy. In 2023, COSO partnered with the World Business Council for Sustainable Development to publish guidance on achieving effective internal control over sustainability reporting. From an application perspective, there are three aspects: risk appetite, information communication, and monitoring. Boards define tolerance for ESG risk, could be carbon emission or labor practices, etc. Sustainability metrics are collected and reported with the same rigor as financial data. Independent assurance validate ESG disclosures. Example, a manufacturing company aligns the COSO ERM with Task Force on Climate related financial disclosure and its requirements, thus ensuring the ESG risks are considered in strategy and the performances. Let's look at COSO and with respect to artificial intelligence. Artificial intelligence introduced both opportunities and risk biases in algorithms, opaque decision making, cybersecurity vulnerabilities, and ethical dilemmas. COSO has begun issuing thought leadership on AI governance, aligning its principles with emerging AI risk frameworks. Now, board must oversee AI adoption with ethical guidelines, should identifying risks such as biases, discrimination, explainability gaps, and regulatory non-compliance are part of the risk assessment. Testing AI models, validating data sets, implementing human in the loop controls are part of the control activities. Ongoing audits of AI systems, bias detection, and retraining of models are part of the monitoring aspect. Example, a financial service company applying AI in credit scoring uses COSO ERM to define acceptable risk appetite for model accuracy, fairness, and regulatory compliances. Let's look at blockchain with respect to COSO. Blockchain technologies introduce new trust model and risk. COSO addressed this in its 2020 guidance known as Blockchain and Internal Control, the COSO perspective. Now, blockchain offers transparency, immutability, and efficiency in supply chains and financial reporting. Regulatory uncertainty, cybersecurity threat to digital wallets, and governance challenge in decentralized networks are the major risks in this space. From a COSO alignment perspective, it defines governance for blockchain initiatives. It helps identify vulnerabilities in consensus protocols. It helps implement key management and transaction validation processes. It helps audit blockchain networks for anomalies and compliances. Example, a supply chain company adapting blockchain for provinces uses COSO ICIF to design controls over data input, transaction validation, and third party integration. From a cloud computing perspective, adoption raises concern about data security, privacy, compliance, and third party risk. COSO frameworks provide structure for governance. It helps in evaluating risk of vendors lock in, service outage, and regulatory compliances. It helps in implementing identity and access management, encryptions, and SLA monitoring. It also helps in ensuring cloud providers share timely and accurate incident data. It helps in having independent audits aligned with COSO principles. Example, a healthcare provider migrating to cloud applies COSO to align the HIPAA compliance with SOC 2 assurance, thus ensuring patient data's integrity. COSO with respect to Internet of Things. Internet of Things expands the risk surface by connecting billions of devices from smart meters to medical implants. COSO frameworks provide governance at the enterprise level. It helps in identifying risks such as device hacking, data leakage, or safety failures. It helps in enforcing authentication, encryption, and firmware updated policies. It helps in continuous monitoring of IoT telemetry for any anomalies. Example, a utility company deploying smart grids use COSO ERM to assess cyber physical risks and integrate IoT security into enterprise risk appetite. The rollout of 5G networks introduce opportunities for digital innovation, but also new risks. Network slicing vulnerability, increased cyber attack surface, and regulatory oversight. COSO can support telecom operator in governance. Boards oversee 5G investment with defined risk appetite. COSO helps with that. COSO helps in evaluating geopolitical risk or operational risk, and cyber risk. COSO helps implement network segmentation, encryption, and supplier assurance aspect of it. It helps in independent audits of 5G security architecture. Example, a telecom operator applies COSO ERM to assess risk in 5G rollout, balancing revenue opportunities from IoT services against regulatory and cyber risk. COSO and digital trust. Across all digital age application, COSO ultimately reinforces digital trust. The confidence that data, systems, and organizations are reliable, ethical, and secure. By embedding COSO into digital transformation, organizations achieve transparency, accountability, and resilience. Here, reliable reporting of financial, ESG, and cyber data helps with the transparency aspects. Clear governance over digital risk helps with the accountability aspect. And continuous monitoring and adaptation to emerging threats helps with the resilience aspect. Let's look at challenges in applying COSO to digital risk. Well, despite progress, challenges remain. COSO guidance lags behind fast evolving technologies like AI and quantum computing. COSO provides governance principles but not detailed technical control. Hence, it requires alignment with NIST or ISO, etc. Smaller organizations may struggle to apply COSO to complex digital environments. Regulations such as GDPR, DPDP Act, and EU AI Act differ regionally, thus requiring tailored COSO mapping. COSO's adaptability ensures it remains a vital governance and risk framework in the digital age. By extending its principles to cybersecurity, ESG, AI, blockchain, cloud, IoT, and 5G, COSO provides organization with a unifying compass for navigating digital transformation. Yet, COSO is not a technical standard, it's a governance framework. For maximum effectiveness, organizations must map COSO principles to the technical framework. Could be NIST CSF for cybersecurity, ISO 27001 for information security, or NIST AI RMF for AI risk. In essence, COSO offers the why and what of the digital risk governance, while technical framework provides how. Together, they enable organizations to pursue innovation confidently while maintaining resilience and trust. Sector specific perspective. While COSO framework are universal, their practical relevance differs across industries. Each sector faces unique risk, regulatory requirements, and operational realities, thus requiring COSO to be adapted accordingly. The following section explores how COSO is applied in the five major industries. Let's go through them in each space. BFSI. The key risks are credit risk, market risk, liquidity risk, operational risk, or regulatory compliances. From a COSO perspective, it provides the foundation for SOX Section 404 compliance in US listed banks, ensuring reliable financial reporting. It aligns with Basel III's emphasis on risk governance, stress testing, and capital adequacy. It supports anti money laundering and fraud detection systems. COSO's risk assessment and monitoring principle aligns with FFIEC cybersecurity guidelines and RBI IT framework. Example, a global bank applies COSO ERM to establish a risk appetite framework, accepting higher risk in innovations but maintaining near zero tolerance for credit reporting errors. This is an example. Telecommunication key risks are revenue leakage and fraud, cybersecurity risk, or complying with regulatory requirements. From a COSO perspective, it helps in with the strong billing and reconciliation controls to prevent revenue losses. It helps in evaluating risk of 5G rollout, including supply chain dependencies and geopolitical considerations. It helps board use COSO ERM to balance growth with new services against operational risk. COSO supports transparent reporting to telecom regulators. Example, a telecom operator launching 5G services uses COSO ERM to identify risk in vendor selection, customer data privacy, and cross border compliance obligations. From IT and cloud service perspective, the key risks are third party vendor risks, data security and privacy related risk, service reliability risk. From COSO perspective, COSO ICIF underpins service auditors report for cloud providers, ensuring trust with enterprise customers. It helps identify risks such as vendor lock in, cross border data flows, and compliance with localization laws. COSO ensures providers share timely information on outages, security incidents, and compliance certifications. It helps with the identity and access management. It helps with encryption and configuration monitoring mapped to COSOs. Example, a global cloud provider aligns COSO with SOC 2, that's trust service criteria, to demonstrate governance and reliability to enterprise clients. In healthcare, the key risks are patients' data privacy, compliance with billing and reporting standards, cyber security threats, and patients' safety and quality of care. From COSO's perspective, COSO ICIF ensures accurate billing, prevention of insurance fraud, and compliance with healthcare regulations. It helps identify systemic risks such as pandemics, cyber attacks on hospital networks, and reputational risk from malpractices. It helps with the continuous auditing of patient records and electronic health record systems. Also strengthens board's oversight of patients' safety and compliance. Example, a hospital chain integrates COSO ERM into its governance, defining risk appetite for clinical quality while acknowledging operational risk from rapid digitalization of patient records. From e-commerce perspective, the key risks are fraud, data privacy, supply chain disruption, or cybersecurity risk. COSO helps with fraud detection tool aligned to COSO principles to monitor suspicious transactions. COSO helps with identifying cross-border regulatory risk for global e-commerce platforms. Boards use COSO ERM to evaluate new business opportunities against fraud and also with regulatory risks. COSO framework support accurate reporting to regulators and investors on fraud losses, on compliances, and consumer trust metrics. Example, a global e-commerce platform applies COSO ICIF to ensure transaction monitoring, privacy control, and accurate financial reporting while expanding into emerging markets with varied regulatory environments. So, while sector specific risks differ, COSO provides a universal foundation across industries. With BFSI, it aligns with Basel, SOX, or AML. In telecom, it addresses fraud, compliance, and 5G risks. With IT and cloud, it provides assurance for third party trust. With healthcare, it strengthens patient safety and privacy controls. With e-coms, it helps mitigate fraud, builds help build customer trust. The common threads include boards across industry are able to define acceptable thresholds for financial, cyber, operational, and ESG risk. COSO ERM ensures risks are factored into the growth decisions. COSO's fraud guidance is critical across BFSI, telecom, healthcare, and e-commerce. Cloud, AI, and data risk increasingly dominates COSO's applications across industries. From a benefit perspective, board can customize COSO principles to sector realities. COSO maps to industry specific laws. COSO helps organization withstand sectoral shocks, and consistent COSO adoption enhances investors, regulators, and consumer confidence. So across the sector, the benefits are with having tailored governance, having a regulatory alignment, helping with the resilience aspect of it, and building the stakeholder trust. Let's look at some limitation and challenges. Well, despite sectoral relevance, challenges like customization effort, regulatory overlap, digital pace, and SME barriers are a reality. Now, each industry requires careful tailoring of COSO principles. So, customization is required. Companies must map the COSO to sector specific framework. That's your individual sectors that you are in. Sectors like e-commerce and cloud, they evolve faster than the COSO's official update. So catching up is a big part of the game for new age businesses. Smaller firms in healthcare or IT services may struggle with COSO's implementation cost. So while it could be feasible for large organization, for smaller one it's a challenge at this point of time. The strength of COSO lies in its sectorial versatility, whether safeguarding global banks from systemic risk, protecting telecom firms from fraud, or ensuring healthcare providers comply with patient safety standards, or enabling e-com platforms to manage fraud and trust. COSO provides a common governance compass. Its universality allows it to act as a bridge across industries. Whether it's board, regulators, auditors, and, and stakeholders, they can rely on COSO as a shared framework of accountability, transparency, and resilience. In a globalized world where industries are interconnected, this cross sectoral adaptability ensures COSO remains indispensable. Future outlook. The committee of sponsoring organization in the Threadway Commission has evolved significantly since its establishment in 1985. From its origins in combating fraudulent financial reporting to becoming the global standard for internal control and enterprise risk management, COSO has continually adapted to meet changing organizational, regulatory, and technological needs. Looking ahead, COSO's relevance will only increase as organizations face unprecedented sustainability pressure or digital transformation or artificial intelligence adoption. Operational resiliency challenges are a major pressure, and regulatory harmonization demands. The future of COSO lies in its ability to serve as a strategic governance compass in an era of complexity and uncertainty. Environmental, social, and governance issues are reshaping how organizations define value. Investors, regulators, and customers increasingly demand credible sustainability reporting. In 2023, COSO released new guidance on applying its internal control integrated framework to sustainability reporting, thus ensuring ESG data has the same reliability as financial reporting. ESG risk is climate change, supply chain ethics, workforce diversity are incorporated into strategy and risk appetite statements. COSO's guidance complements disclosure standards such as the Task Force on Climate Related Financial Disclosure or TCFD. or the Global Reporting Initiatives and the Security and Exchange Commission's climate rules. So COSO complements it. COSO is likely to become the go-to governance framework for sustainability, ensuring organizations maintain transparency, consistency, and accountability in ECG reporting. COSO with respect to AI. AI adoption is accelerating across industries, creating both opportunities and risk. Key risk includes bias in algorithms, opaque decision making, cybersecurity vulnerabilities, and ethical concerns. Boards will increasingly use COSO ERM to define risk appetite for AI adoption, balancing innovation with ethical considerations. Organizations will implement controls over AI model development, training data sets, and validation processes. COSO helps with continuous oversight of AI systems for accuracy, fairness, and regulatory compliance. COSO's principles may serve as governance umbrella, while technical framework like NIST or EU AI Act provides the execution depth. We expect COSO to publish formal guidance on AI risk management, positioning it as a trusted framework for boards overseeing AI governance and ethics. In an increasingly digital world, trust has become an intangible but critical asset. Organizations must prove that their data, their processes, and the systems are secure, reliable, and ethical. Cloud adoption, blockchain, IoT, and 5G creates new vulnerabilities. By integrating internal control and ERM into the digital initiatives, COSO ensures risks are managed without stifling innovations. COSO based governance strengthens investors and customer trust by ensuring transparency and accountability in digital operations. COSO will act as a digital trust enabler, thus helping organizations demonstrate responsible governance of technology and data. The COVID-19 pandemic, the supply chain disruptions, and cyber attacks have highlighted the importance of operational resilience. The ability to withstand, adapt to, and recover from shocks. COSO ERM provides a structure for scenario planning, stress testing, and continuity planning. Control activities ensure resilience measures are embedded in operations. COSO principle align with emerging regulations such as the EU Digital Operation Resiliency Act or DORA, and the Reserve Bank of India's RBI IT and Cybersecurity guidelines. COSO will be increasingly adopted as the backbone of operational resilience framework, ensuring resilience is not just a technical matter but a governance and strategy issues. Organizations today face a complex regulatory landscape. SOX, Basel 3.4, GDPR, DPDP Act of India, HIPAA, DORA, SEC climate rules, EU AI Act, each require compliance but often overlap. Because COSO is a principle based, it serves as a bridge between diverse regulations. Organizations can map COSO's 5 components and 17 principles to regional requirements, thus ensuring consistency across jurisdictions. External auditors and regulators globally recognize COSO, making it a trusted foundation for harmonization. COSO will remain the common language of governance and compliance used by multinational corporations to unify global risk and control practices. Looking future ahead, COSO might adapt to emerging risks that are only beginning to take shape. So, when we look further, the post quantum cryptography challenges could disrupt existing security controls. The supply chain fragmentation, sanctions, and cyber warfare will test the ERM frameworks. Now, beyond AI, organization will need governance structure for biotechnology or genetic data or space-based technologies. COSO's ability to provide principles rather than prescriptions ensure it can adapt to these emerging areas. COSO is likely to expand its library of industry specific and technology focused guidance. It could be AI and algorithmic risk governance, or ESG assurance and integrated reporting, or cyber security resilience. Could be blockchain assurance for finance and supply chain, or it could be cross sector resilience model. As risk evolves, COSO will serve as the umbrella governance model with technical frameworks filling in domain specific details. For organizations, the future looks outlooks implies several imperatives. Move beyond using COSO for SOC compliance, embed it into strategy, ESG, and digital initiatives, and use AI, analytics, and GRC platform to automate the COSO required monitoring. SMEs should adapt proportional COSO practices to avoid overburdening the resources. Here, the key is proportional COSO practices. Need to map COSO to NIST, ISO, and regional laws to reduce any duplications. Boards must treat COSO as a dynamic governance tool not just a static compliance exercise. The future of COSO lies in its ability to remain relevant, adaptive, and forward looking. In the coming decade, COSO will be central to sustainability governance by assuring ESG data integrity. It provide boards with tools for AI and digital trust governance. COSO will anchor operational resilience framework in response to global shocks. COSO will act as a harmonization layer across complex regulatory environments. Ultimately, COSO's greatest strength is its universality by providing a principle based framework that can adapt to any risk, any regulations, or any industry. COSO ensures that organization can navigate an uncertain future with integrity, accountability, and resilience. Checklist sector wise. Let's look at the checklist from a control environment perspective. We divided this conversation into two parts: generic steps, which would be applicable for all sectors, and sector specific steps. So, when we look at control environment, the common required steps are: first is establishing a board and senior management accountability for risk and control space. Step 2 is to define and communicate ethical values and code of conduct. Step 3 is to establish governance committees, which includes audit team, risk compliance team. Step 4 is to assign roles and responsibilities for internal controls and ERMs. Step 5 is to build a culture of accountability through training and leadership tone. So, these 5 steps in this sequence are generic for all the sectors. In addition to that, we have individual sector specific checks for the control environment. Do note, this is only for the control environment aspect. So in addition to 5, the BFSI would require to ensure independence of risk and compliance function, aligning governance with Basel and RBI guidelines. When it comes to tech service provider, need to define governance over outsourced third party services and align with the SOC 2 trust principles. When it comes to telecom space, you need to ensure leadership commitment to regulatory compliance and fraud prevention. When it comes to online business space, you need to establish governance for consumer data ethics and digital trust. When you come into healthcare sector, the board must prioritize patients' safety, HIPAA or GDPR compliances, and quality of care. Now, this whole conversation at this point is on control environment related steps. So, 5 steps are common for all the sectors, and then you have individual extra steps for the sectors in space. The next is risk assessment area. In here, we also have 5 steps sequence. Start with defining strategic, operational, reporting, and compliance objective. That's step 1. Step 2 is to identify risk, whether it is internal or external, that could impact the objective. Step 3 is to assess fraud risk. Step 4 is to consider risk of significant change, whether it could be merger or a new tech or a new regulation. Step 5 is to document your risk appetite and align it to strategy. So these are the common 5 steps from a risk assessment perspective. Then we go sector wise. In sector, when it is BFSI, you need to identify credit, market, liquidity, cyber, and fraud risk. And they should align with the stress testing requirements. When you come to tech service provider space, you need to assess the risk of service outages, SLA breaches, data residency, and third party vendors. When you come into the telecom sector, you need to assess the 5G rollout risk, spectrum compliance, revenue leakage, and geopolitical risk. In online business space, you need to evaluate fraud, whether it is payment, returns, fake accounts, platform downtime, and cross-border compliances. When you look at healthcare sector, you need to assess risks to patient safety, ransomware on EHR, non-compliance with HIPAA, GDPR, and pandemic disruption. So, in a nutshell, from a risk assessment space, there are 5 common generic steps which are applicable across the sector and plus 1 for each. Now, do note these are basic, these are minimum. You might have something very specific within your sector which could be in addition to that, but at least this is the start point. The third part is control activities. We again have 5 steps which are generic across the sector, and then we have individual sector specific activities. It starts off by implement a preventive, detective, and corrective controls. Then you segregate duties, approvals, and authorization. Then you establish IT general control, which includes your access, change management, backups, and so on and so forth. Then you deploy fraud detection and anti-money laundering tools where it is relevant. The fifth step is to document control policies and procedures. Moving on to sector specific. When it is BFSI, you need controls over loan approvals, KYC, AML, market trading, cybersecurity monitoring. When it comes to tech service provider, identity and access management, SOC 1, SOC 2 control alignment, secure software development need to be looked at. When it comes to telecom, billing reconciliation, SIM swap prevention, network segmentation controls need to be focused. When it is online businesses, payment fraud detection, PCI DSS compliance requirement, and inventory reconciliation need to be checked. When it is about healthcare, patient record access control, medical billing accuracy, and device security patches are specific things that need to be managed here. Now, this is for the control activities. The next is information and communication. This has 4 generic steps, and then we have one for sector specific. Starting off, you need to establish systems for collecting, processing, and communicating information. Then step 2 is to ensure communications of roles and responsibilities. Step 3 is to report risks and control deficiencies to governance committees. Then you need to ensure transparent external communication with regulators, investors, and customers. Coming on to sector specific, If it is BFSI, you need a board level reporting on Basel compliance, SOC certifications, and RBI IT compliances. When you come to tech service provider, you need to provide client transparency through SOC reports, incident notifications, and SLA performance. When it comes to telecom, you need regulatory reporting to DOT or TRI or FCC on compliance, spectrum usage, and lawful interceptions. When you come to online businesses, you need customer notification on any data breaches and a clear privacy notice. When it comes to healthcare, you need timely patient data reporting and audit trails for medical records. Do note this is 4 plus 1 checklist for information and communication aspect. Next, on the monitoring activities. In this, there are 5 steps, and then we have one specific for sector specific. Starts off by establishing continuous monitoring of controls. Step 2 is to conduct internal audits against COSO principles. Step 3 is ensure remediation of any deficiency. Step 4 is to periodically reassess the risk and control effectiveness. Step 5 is to leverage automated monitoring tools. When you come to sector specific area, for BFSI, you need continuous fraud monitoring and regulatory stress test and PCAOB and SOX audit. When you come to tech service provider space, you need continuous IT control monitoring, whether it could be IAM, encryption, logs, and so on. When you come to telecom space, you need to monitor fraud and network security events. When it comes to online businesses, you need to monitor suspicious transactions, digital trust metrics, and customer complaints. When it comes to healthcare, you need to have an ongoing audits of patients' data access and quality of care indicators. So monitoring activities can have this 5 plus 1. In addition, you can have a customized checklist for your space. In addition to this, can be a start point. Now, at a strategic level, in addition to the ICIF, organizations should embed COSO ERM. Now, in this, there are 5. From a governance and cultural perspective, you need to define ethical tone and risk awareness. When it is strategy and objective setting, you need to link risk appetite to strategic planning. In performance, you need to identify, assess, and respond to risk affecting goals. From a review and revision perspective, you need to adapt ERM to external changes. In information and reporting space, you need to have a transparent communication of risk performance linkage. When it comes to sector specific, at BFSI level, you need to link capital allocation decision to the risk appetite. At tech service provider setup, you need to align the client SLA and innovation goal with the risk strategy. On online businesses, you need to balance rapid market growth with consumer trust and fraud risk. At telecom space, you need to balance the 5G expansion with cyber and regulatory risk. With healthcare space, you need to align patient safety goals with ERM appetite for digital innovation. In summary, control environment has different space for different verticals. You have Basel and RBI risk governance for BSFI. For tech, it is SOC 2. For telecom, it is DOT. For online banking, is consumer data ethics, and so on. In healthcare, you have HIPAA. Similarly, from a COSO component perspective, you have control environment, risk assessment, control activities, information and communication, and monitoring. Well, how do we implement for all sectors? It starts off with gap assessment, wherein you compare your current practice with COSO's 17 principles and ERM principle. Look at your current practice and then compare. At design and customize phase, you need to tailor the COSO control to industry specific risk and regulation to your industry. Next is the integrate phase, wherein you embed into the business strategy, operations, compliance, and IT. Next is your automate phase. You need to leverage the GRC systems, analytics, AI for continuous monitoring. In report and improve, you need to provide a transparent reporting to boards, regulators, and stakeholders. So, this is how you can have your roadmap built in for implementing the COSO. With this, we have come to end of part 3. We'll pause here. We have covered the agenda in some areas of it. The rest will continue in the next part. I'd like to thank you for the time that you have invested till now for this topic. I'll take your leave. This is your host, Savit Vittal Salian. See you in part 4. Namaskar.